All right, good afternoon, everyone. Futures Barizio here. It is 2:20 on Sunday, June 8th, 2025. Hope everybody's doing great. And I know I've been gone for 2 weeks. Last video I made it was about 2 weeks ago, and I think I did mention in that one I would be away for the following week, which I was. I was actually down in Aruba, which was beautiful. If you've never been there, certainly suggest if you ever have the ability to do so to go visit Aruba. So, um, anyways, and then this past week I was back, but I was just really busy, kind of getting back with the markets and just doing some other stuff with family. So I just didn't have the chance to make a video, but just to want to post this one and just kind of reset again on a couple of things. So we'll just jump right in here. So we'll start in futures. And again, if you haven't watched any of my videos in a while, I'm primarily using Heikin-Ashi charts now for my analysis and trade entry. And I'm not going to get into a whole thing about it, but because there's tons and tons of information you can get about Heikin-Ashi. But um, they basically help smooth out price action, smooth out noise in the market as opposed to just the regular candlesticks. They're not foolproof. They do have some drawbacks because of the way they're calculated, because they're not actually displaying the actual true level of price at any given time in live action. And I think you have to be careful. The biggest thing with Heikin-Ashi charts is as price approaches key support and resistance areas, and or your take profit area, especially if your take profit is sitting at a key level, I think it's important at that point to be careful with Heikin-Ashi charts and either use a short time frame or just temporarily switch back over to regular candlesticks, because again, the way they're calculated, I'm not going to get into all that in this video. To me, that's where they have a drawback, okay? Because you could have a blue, in this case, a blue bullish Heikin-Ashi candle, but price actually on the regular candlestick chart could actually be starting to turn down. And, you could be, caught with something that is, not an ideal position. But it's a minor thing. But in general, for analysis purposes and just kind of letting you see the swings in the market a lot easier, I think they're perfect, and I've really become accustomed to looking at them now versus regular candlestick charts. So I'm not telling you to do it, but I just wanted to let you know that if you look at my chart and you say those are weird looking candles, it's because they're Heikin-Ashi candles, okay? And so this is a MetaTrader 5 account. This is my live futures account, but I also trade on a funded account. And you can see, which is I have linked through TradingView with the broker. I use my funded futures, and you can see I'm using Heikin-Ashi candles on this chart too. You can see it right up here because Heikin-Ashi candles are an option in TradingView for the type of candles. Okay, so I'm using them on here too. So this is where I trade my funded account through here down, with TraderVate down here. And then, again, my live account. This is an indicator you have to get from MetaTrader to see Heikin-Ashi charts in MetaTrader because it doesn't include it. But there's a free indicator you can download, and it's basically converts your chart to Heikin-Ashi, and it works pretty well. So, anyways, so let's talk about some of these futures markets. So, I've added a couple of assets to my watch list, namely soybean, soybean meal, soybean oil, and corn. I don't know if I mentioned corn in my last video or not. I do like looking at grain markets in the summertime because they tend to be more volatile because of crop issues, because a lot of these crops are harvested, in the spring, summer, fall, and so there's a lot of things that can cause volatility in these markets and trends, inventory, weather, whatever, anything that can cause damage to crops or have them be bumper crops, et cetera, et cetera. So I do like looking at these markets especially this time of year, they do tend to move a little bit better. And so this is soybeans, this is the August contract. I'm on a 1 hour chart here. And again, guys, most of my trading now, I'm doing analysis on the 30 minute to, well, sometimes the 15, but normally the 30 minute and 1 hour chart. I may drop down to a 15 minute, 10 minute, 5 minute for an entry fine tune, but my a normal analysis is looking at the 30 minute to 1 hour chart. I will go out to higher time frames to try to find some key levels that price might be reaching towards, but but I'm taking my analysis off, the 30 minute to 1 hour chart. Okay, so for soybeans, these two red lines up here basically represent higher time frame resistance areas, which for that, what I usually do is, and I've mentioned this in previous videos, is use the cash chart, because again, futures charts, as you go out to higher and higher time frames, you're going to have very limited price data because it's a futures chart, right? It has a beginning and an end date, whereas a Forex pair or a cash chart is going to show you price history as long as your broker, has history to show, back in the past. So you can go out to 4 hour, 8 hour, 12 hour, daily, weekly time frames and have that historical data to look at. And so for something like soybeans, if I go back to my my trading view, and this is I know you can't see it off to the left, but this is the CFD chart, the contract for difference. Basically, this is the cash chart for soybeans. Okay, so this is not a futures contract, but you can see the chart is very, very similar as the futures chart. Okay, in terms of what we're currently in this uptrend, with these stair stepping, and this is where I, kind of look at a couple of these areas of support or resistance. So, and this is kind of like what I what you just saw on my futures chart. So, I would expect that price is going to reach up towards, probably towards this level initially, which we still have some headroom. This is probably at least another day or so of price action up to here. And if it gets through there, then this next swing is up around here. If we go out to the daily chart, you can see all these areas right here. So you can see, especially this top line here, we basically, the top or the middle line, we've had multiple hits here, 2, 3, 4, multiple hits here, where price has gotten to about this middle line and pulled back. So I do anticipate that price will get up to here and then we'll have a reaction. Doesn't mean it's going to reverse. And in fact, it could just blow right through here and just keep going up and finally break through this. But you can clearly see this is a resistance area. So I'm not going to be looking just to, get up into this area and then selling from here. But if I'm taking long positions, I'm just going to be aware of the fact that this area up here contains a lot of resistance, and that price, if nothing else, will pull back a little bit. Okay, so that's why I look at the higher time frames, just to make sure as I'm trading on the shorter time frames that I'm not slamming into a major support or resistance area. And we are approaching that with this market, but it doesn't mean we're going to hit it. And it doesn't mean it's going to reverse over here. It's just kind of something to keep an eye of. And if price does get up to this area, I probably will be more cautious on taking long positions, just simply for the fact that, the market will have to prove it can get through these areas, especially through this top line, which is kind of like the high end of this resistance area, right in here. If price can get up through here, then I think it certainly could go a lot higher. There's a lot of space here. There's some other areas of opportunity like right here and over here and up here. But, we're nowhere near there, so I'm not worrying about that right now. This area right in here is where I'm looking right now. Okay, so back to the futures chart. You can see, again, this is similar to what you just saw down on the on the cash chart, that I'm looking to see price trade at least up into this area, which is kind of an intermediate swing high. And then if it gets through there, this one up here, which again kind of represented that middle line that you saw on the cash price. All right, so there's a lot of room to the upside here, and I think price will at least get up to here. But again, once it gets up to one of these red lines or anywhere in between here, I will be cautious. But you can see it's making really, really nice structural moves right now. Okay, on this time frame especially, it's very easy to see. We have a higher low, higher low, higher low, higher high, higher high, higher high, higher high. Okay, So if this is going to continue, then of course what I'd expect is, again, some kind of pullback here. And as long as it holds this structure level, I'm still looking, at a bullish scenario. Okay, and then have price make another run higher. I don't know how high. This arrow certainly doesn't represent where I think it's going in one day, but somehow it'll come up and make a new high. Okay, and again, this is what I consider a structure area. So as long as price holds this area, then I maintain my bullish bias. You can see the one trade that I took on here since I opened this chart on this account. This was a trade I took on Friday. You can see the blue, and this is where I got in. We had a nice pullback as soon as I saw a blue candle, which also aligned with the CCI breaking above the zero line right down here. You can see CCI breaking back through the zero line, which is how I use the CCI. This is just a 10 period CCI. I don't use overbought, oversold levels. I just use zero line crossovers in the direction of the trend to help me measure when a good time maybe to get in. Again, you don't need this indicator, and I don't always even look at it, but it's there, and it is pretty good as long as you're trading it in the direction of the trend. Again, I don't use it for counter trend signals. I'm not really using it for divergence. I'm not using it for overbought, oversold. You see, I don't even have the high and low levels even on here. I've turned them off, and I only use the zero line. But you can see, we came down here, and then we had this zero line cross on the CCI, and then we had this blue candle, and that was my entry. I put my stop. I had my stop just below this swing, and that was it. And I closed it at the end of the day. You can see that's the last candle of the day here on Friday. Right here, that was the market close. You can see that was the last candle it painted for the day. The one drawback with these markets is, well, if you want to call it a drawback, is that they have limited trading hours. Most of these grain, Chicago Board of Trade grain contracts, the market closes at 2:20 Eastern time. Okay, so if you look on the Chicago Board of Trade contract specs, it'll say 1:20 because that's Central Time in the U.S., like Chicago time. But that's 2:20 Eastern. So it's not that you can't hold it overnight, but if you're going to close, if you want to be out in the same contract, the same trading day, you have to close your position no later than 2:20 p.m. Eastern time. Okay, which I did. I did not want to hold through the weekend on these. So these, even though I don't consider these scalp trades, I consider them day trades. But I normally get out at the end of the trading day. Occasionally, I'll hold it. I did actually take one on my futures account. It was actually this day, and I did hold it overnight, and it actually did work out where I think I got out, I want to say when this red candle started forming, so I had taken it down here. I think this was the overnight, and then it went up, and I closed it somewhere over here. But that was honestly because I just forgot to close it. Fortunately, it worked out. So, but I do tend to like to just close these things out at the end of the trading day. So, all right, so you can see that's soybeans basically trading in a nice stair-stepping fashion up. And so again, as long as we hold this structure level, I'd be looking to for some kind of pullback and then another move higher. Again, I'd love to see the CCI cross back below the zero line to somewhere, and then in conjunction with the price action, which is the most important thing, to see it cross back above the zero line, and that would also help confirm an entry. And you can see, like I said, I don't trade. I'm not using the CCI for anything except that. Again, no divergence, no overbought, oversold, nothing. It's just the regular CCI indicator. I turned off the upper and lower levels, changed the period to 10. It defaults, I think, when you open it to 14. You can use 14. I think it's a tad bit long, so I lowered it to 10. But 10 or 14 is fine. So I think the shorter you go on time frames, the longer you can make that period to try to smooth out some of the false signals. I think if you go up to higher time frames, you want to lower that number, because if you're going to rely on it for entries, it's going to have too much of a lag if your period is set too high. But for this 30-minute to 1 hour time frame, I find like 10 to 14 is a good setting. So, all right. So anyway, so that's soybeans looking really nice just in terms of stair-stepping patterns. If we go on to soybean oil, this is the July contract of soybean oil, which I'm probably going to have to roll over to the next contract month, which I don't know if it's August or September. I have to look. This one's, pretty much like soybeans. It's, we saw this big downtrend and we had a change of character right here. Price rallied out through these highs, took out like the last major swing like in here. This is all like substructure here. Some people would consider like this the swing high, but either way it broke everything and we pulled back. We did have, a push higher, which was rejected a little bit. And again, Heikin-Ashi candles are can be a little funny because the wicks don't always mean what they mean in regular candlesticks. But this is when you see a really big wick like this, there still was rejection in here. You can see price came down off this high, came back down. I put this line as the support level. On Friday, it did try to go higher again. This is the 15-minute chart. Let's go out to a little higher time frame. You can see we failed to put in a new high on Friday. So, I'm a little more cautious with soybean oil, but I still think it, for the most part, it will follow soybeans. So what I expect to see again is, as long as this area right here holds, potentially see a little bit more of a pullback, and then hopefully we'll shoot higher. And, we can potentially look for longs on here. Okay, I did take a trade on this on Friday. My futures account did not, my funded account did not take it on here. I got in about right here, and then I closed it at the end of the day here. So it was a small profit, but you can see price never really got any higher. So I ended up closing it obviously at the end of the day with a small profit, but not as good as the soybean contract, but we'll see what happens with that next week. Okay, and then lastly, soybean meal. I am not trading this. You can probably tell why. Here's the 30-minute, here's the 1-hour chart. We're just stuck in a range. You can see it's been range bound really since about mid-April. Essentially right in this zone right here. Just take out some of the extremes here. So we've been stuck in this range. I'm not interested in this at all. So for soybeans, it's really just soybean oil and soybeans, regular soybeans that I'm looking at. Okay, so unless and until this changes, I'll keep an eye on this. But I don't like range trading, so I'm not looking to like sell it off here down to here, buy it off here. I'm not looking to do that. Okay, I want to trade trending markets and continuations. All right, so on to corn. I have taken a lot of trades with corn over the last couple of weeks, but we are seeming to enter into a little bit more of a consolidation now on corn. You can see basically this area right here. We had been trading down. I was selling corn short pretty much for the last couple of weeks. We've been making some nice stair-stepping low. It's a little bit more volatile. Right now you can see it's choppy, but I feel right now that we might be entering into a potential transition phase to longs. I don't know. I'm not telling you to go long, but you can see, we had this last pullback and we came down here, failed to break this low. Well, technically we probably did, but we pulled back into the range. So I don't consider this wick down here to be a real strong sign because it snapped back into the range, and then we tried again. We came back up a little bit, tried to go again, and then again hung up at the same level, and then we had this pretty bullish price action come in here. So basically I want to see price get over this swing high. I would love to see price break through this line and start going. We still potentially have this area right here to act as resistance or potential supply. So a breakthrough here would be nice, but a clearing of this high would be even better. But as of right now, I'm not trading corn until it kind of shows what it wants to do, because we're clearly entering into a little bit of a consolidation phase right now. And so, we'll see. Now, if it follows kind of like the seasonal pattern, like what soybeans are doing, just grains in general, then you would think that it would start going higher. But I'm not sure, and I'm not going to try to judge it. But that's corn right now. Like I said, I did take several trades in corn. I don't know if they'll even show you. You can see some of them here, and um, a couple of them, you know, I had some real good ones. There were a couple losses. There was a stop out right here. There was another stop out here, but I had a couple really nice ones here and here, and a small win here. Okay, so actually I had two wins right here, because I took two trades. And so, but I'm done right now taking any more trades on this until it breaks out and kind of shows what it wants to do. So we'll keep an eye on corn. On to copper. So with copper, we seem to be in a downtrend right now. And so basically I'm still looking for, I have an alert set right here because I'd like to see it come up here and then potentially sell it. I just kind of picked this just based on kind of a 50% Fibonacci. But so copper's still in a downtrend, so I would like to see it potentially, you know, rally up somewhere and then maybe make another run down. And again, I'm targeting, you know, for these shorts, if it's going to stay bearish, I think this area down here is a good short-term target for short positions. And then of course we have another one down here at this larger time frame swing low down here. All right, so nothing in copper right now. I'd have to see a bigger pullback. Again, I'd love to see the CCI get back above the zero line and then see some bearish action and have it cross back down. Okay, and then potentially look for shorts in there. But so again, you know, if you want to use the CCI, again, you're looking for kind of moves up through this level, through the zero level for shorts, and then back down through it. And as soon as you get a close below that level, that's a potential entry. And again, the price action rules, not the indicator. The indicator is secondary. You don't need to use it at all. But it is an extra little confirmation you can use, but just don't, you know, trade based on just what an indicator tells you, because you can get tons of false signals. And, you know, the price action is still king. Okay. Okay, natural gas. I'm not going to spend a lot of time here. You can see this rectangle I've had. This has been basically moving sideways the entire month of June. It does appear to have wanted to have broken out here on Friday. However, if we now zooming out to the 1 hour time frame, you can see there is a level sitting right up here with multiple touches on this area. So let's see if this is a fake breakout and if price is going to, you know, return and resume its downward push from here, or if we kind of finally break through all this consolidation. But be careful for fake breakouts even out of this area, where maybe you could spike up, you know, through here. You get one or two candles closing above here, you know, pulls people in on breakouts, and then all of a sudden, you know, it dumps again. So I'm not saying again that's going to happen. But, you know, we are approaching kind of a major resistance area here. So, again, the bottom line is I'm not trading this right now until I feel like it's broken out of this consolidation area and either resumes its downward march or clears out all of these highs and starts, you know, moving a little bit higher. And you can see on oil, you can see I've got this, you know, oil seems to be a little bit more bullish after kind of some, you know, real bearish run. You can see we've kind of cleared out a lot of this consolidation now on Friday. So if this, as long as we have a hold of this structure right here, this is the 15-minute chart. Go out a little bit and go to the 30. Here's that last pullback. So what I'd like to see now, you know, if the bull run is going to continue, to see price again pull back. Now whether it pulls all the way down into here, or whether it, you know, comes up and, you know, what was before, you know, resistance now turns into support, and then it bounces from this level, you know, from here. I don't know. But again, if the bullish price action is going to hold, then again, I'd like to see some kind of pullback, whether it's to here or even deeper, as long as this swing holds, and then continue to look for long positions. And I need to put the CCI on here. There's your 10-period CCI. So again, I need to see, you know, to help, you know, with this, to see the CCI get below the zero line, which we're not right now. We're still trading above it. And so, you know, any kind of bullish price action right now is not going to interest me. I'd want to see again some kind of break below the zero line and then a pull back higher. Okay, so that's it for futures. On quickly to Forex. I'm not going to go through all of this, all of these, but just a couple of open positions. And you can see for Forex, I'm really just trading US dollar pairs, and I do have the pound yen. But other than that, I'm just trading US dollar majors for the most part. And so on GBPUSD, you can see I'm holding a short position. Didn't really do a lot on Friday. We had non-farm payroll, which was when the NFP number came out, very typical. That was this candle right here. This was Friday morning, 8:30 New York time. This is the 15-minute chart. So this was that first candle. When the news came out, you can see it has this giant wick. Came down, swept liquidity here, snapped up, took liquidity here. Very typical, just violent whipsaw based on the news, just to stop people out, sweep liquidity. But overall, what ends up happening in this case, the market calmed down and the downtrend basically continued. So at that point, I took a short, and I am holding this through the weekend, as you can see. And I do have this on my funded account too. And so this is actually a demo account. I only trade Forex. I think I've mentioned that before. I only trade Forex on a funded account, but I have this MT5 demo account with Forex.com because I just like to use MT5 for my analysis. I'm just a sucker for MetaTrader, so I do like using this for analysis. But I only trade this on my funded account. And the other one, I think I'm in euro dollar. Yeah, I'm in euro dollar short too. Euro dollar and pound GBP and GBPUSD are very, very similar. They move very similar. They're almost identical. So you can see this is pretty much the same price action. So these will either both be winners or they'll both be losers. That's the bottom line. But again, they are both trending down right now, and so I have a pretty tight stop take profit on this at this level. But if it gets through here, then I certainly think there's quite a bit of room to run lower down to probably at least into this area here. So we'll see if we get through this support. This is the 4-hour support level. If it gets through there, then I probably will look for re-entries, if my take profit gets hit, to look for re-entries back to this level. And it's going to be the same thing with the pound USD. So of course that should be causing US dollar pairs to move up. If the pound USD and euro USD are moving down, it's probably being driven by the dollar. So of course, so here is US dollar yen looking pretty bullish. You can see we do have on the 30-minute chart, we do have the CCI trading under and turning back up to potentially make a run back through the zero line. So I will be looking at US dollar yen for potential longs if we can get some positive motion on that back to the upside. And so relatively bullish on dollar yen, again at least up until probably this area here, which from where it is right now is about 130 pips away, so that's pretty good. I certainly would take that. All right, GBP yen. We are approaching kind of major support, major resistance up here. See, I have this not so straight line right here. Let's get rid of that and just put a regular horizontal line. You can see we have that area that we're approaching, so I'm not really too interested in trading GBP yen right now. I think there's a lot of resistance potential areas here. And you can see overall on the daily chart, it's pretty sideways. So not really actively trading GBP yen right now. I'd be more inclined to, if we can start taking out structure, to maybe move back to the downside, but I don't know if that's going to happen. But for longs, just because of where it sits on the higher time frame, I'm a little bit hesitant to, with these resistance areas in here, and then a few more overhead, even a little bit further up the scale, to necessarily trade this short. So I'm not really actively trading GBP yen right now. Aussie USD looks very much again like the Euro USD and the Pound USD. So I am in 2 out of those 3. I didn't feel it's worth risking 3 of them, because you're either going to be right 3 times or wrong 3 times, and that's just not good risk management. Okay, so but you can see it looks pretty much the same story as the pound dollar and the euro dollar. And dollar Canadian, this is a little bit, this is not very appealing to me right now either. This should be going up more aggressively just because of the potential strength with the US dollar. However, I think the Canadian dollar has some strength right now because oil, as I showed you in the futures, oil might be turning higher. So if oil turns higher, then the Canadian dollar will probably get strengthened, because that's the oil is the Canada's main export item is oil. And so if oil goes up, the Canadian dollar generally strengthens, not always, but generally. And so again, that could be causing kind of this slow price action on the US dollar CAD, because you've got, potentially 2 strong currencies, or one strong and one fairly strong, going against each other. And so that causes a slower price action. So again, not really too interested in US dollar Canadian right now, until it can, potentially show some more distinct price action and swing levels. So not really interested in this. So for me right now, it's just continuing to watch Pound USD, Euro USD, and a potential look for a long on dollar yen. Okay, so that's it. That's all I do in Forex, just these half a dozen pairs. I just don't go crazy with Forex anymore. I'm more concentrated on my futures accounts. So, but I do like Forex still. But again, I just stick to pretty much just dollar pairs and trade the New York session. I just threw GBP yen on there just to have one cross. And that's a pretty popular one. It's pretty liquid. When it does trend, it does make some nice trends. So that's why I chose that one. So, all right. So that wraps it, guys. Again, make sure you smash the like button, subscribe to the channel. Questions or comments, leave them down below. And but that's a look ahead for the week, and what I'm thinking anyways. Be curious to know your thoughts. Again, leave your comments down below, or any questions or anything like that. Again, guys, use your own judgment on trades. These are just my ideas of what I see. Certainly you should not be taking any trading advice from me. Use your own discretion. I have no idea what your situation is, or what your risk management or your experience is, so don't trade based on anything I'm telling you. Just use your own analysis, make your own judgments. This is just for information, and just again, to look at what I think. So but again, you shouldn't take my word or any other trading person on YouTube's word for it. Develop your own system, make your own decisions. This is just to expose you to a different look, food for thought, but at the end of the day, it's your decision. So all right, so that's it, guys. Have a great week, or a good weekend. I promise I will be back this week and try to be a little bit more engaged on YouTube, as things will settle down for me for a couple of weeks until I'm off again for a little while. But for at least this coming week and the next week, I should be pretty available. All right, guys, have a good rest of your day. Again, like the video, subscribe if you're just finding it, leave questions or comments below, and we'll talk to you soon. Thanks.